Good morning, guys. Can y'all hear me okay? And is the video good? Okay, thank you, Brian. Good morning, guys. Let's kind of jump into it. Um, Yesterday was quite the phenomenal day, and actually overnight has been pretty damn interesting today. So usually after a big day like yesterday, I expect to go into balance. It can be a wide balance range, but I expect to go into balance. We're currently trading at 1814, and let's in a minute, we'll look at the volume profile. I have let me minimize this. There we go. So I've put in really wide ranges today. So the white zone today is sitting at 1817 and three quarters to 1819 and three quarters. Um, it would be nice if we can come up out of the gate and test the white zone. So when you get wide ranges like we had yesterday, you have to anticipate that at least the possibility of the wide ranges continuing. So normally, if you look for a 6 point rotation, you might want to add 1 or 2 points. Now, we could simply go into a small balance range, right, and not have those wide rotations. However, remember, if I'm going to make a mistake, I always want to make a mistake on being overly conservative than overly aggressive. In the last couple of days, demonstrate the reason for that is that we were in balance. As a matter of fact, I think on Wednesday I had no trades developed whatsoever, right? But by avoiding digging any kind of significant hole while things are difficult, right, or when we have such a narrow range, when we have a big day like yesterday where there's a lot of profit opportunities, we're not digging out of any kind of hole. We can go straight into increasing our bottom line and growing our trading account. So let me go through the scenarios that I have first on ES and NQ, and then once I'm done with that, I'll go into greater detail with both the tick charts and the volume profiles. So looking at the open here, let me get my drawing tools up here real quick. I apologize. Okay. So assuming an open of approximately 1814, which is right into Thursday's low, right? Um, so it would be nice. It'd be nice if we can get an open and hold the low and get a drive up into the white zone. If we get a drive up into the white zone, you have to make a decision prior, right? If we open here and we get a drive into the white zone, it's going to be exactly 6 points at the back of the zone, right? White. So the front would be very aggressive, and the back would be more along the lines of where we normally take a trade at 6 points. Again, this is assuming an 1814 open or lower, right? So you have to account for the fact that we're having larger volatility. And yesterday afternoon, right, we ran straight up into this 1826 and I think a drop higher after the close. So I'm willing to take the risk. I'm willing to take the loss in the white zone the first time in, looking for the rejection of 2 points lower. If we blow through the white zone, right, above there, we have gap fill and then initial resistance up here. At each of these points, right, I will look to take a responsive trade. What will be the exception or what will give me pause at taking these trades? If we get an open drive higher, right, now this will be a little bit different if we get an open drive higher. What would cause an open drive higher? What I would look for in the tick is an extreme out of the gate, meaning we're getting plus 1,000 ticks really from the open. If that's the case, it's very common. Obviously, nothing's perfect, right? But it's very common to get some initial stutter steps and then a slow drive higher. And that slow drive higher will actually often turn into a trend day up um, through the balance of the day. I'm not certain that's what we'll get, but that will certainly be on my radar? What would be indicative of a trend day up off of a gap down, right? Well, we have our sure signs, right, where of at least taking caution against counter trading it. When in the first 15 minutes you get 3 solid bars up out of the gate. I'll see if I can find an example. We had one of these days not too long ago, right? We had 3 solid bars out of the gate. That would put me on a warning. Again, I'm not talking about white zone. These would be significant. Like the first bar would be 3 to 5 points. The next bar would be 3 to 5 points. It'd be a pretty strong drive up, right? That would put me on caution for being overly aggressive on the short side. I'd want a nice fat stretch, and I'd want to see tick divergence, right? So in this scenario, if we get this open drive higher, right, which is where my biggest concern is, because that's where the majority of damage takes place for traders, is when they get run over and they keep trying to short that and they get pounded again and again, right? So again, time frame is important. I would not look to take the counter trade if that's the scenario that we identify until we get to this 9:30 to 10:30 range, somewhere in here. And I would certainly look for tick divergence to assist me in those zones. So that's the first thing I'm going to have caution for. The first thing I'm going to be looking for is where's the tick out of the gate, and also the possibility of open drive higher off of the gap down. So the next thing that I'm looking for, right, if we open at this, again, 1814, 1813 area, the overnight low, we tested that 1808, which was the prior low going back a couple of weeks ago. It might have even just been last week, excuse me. The ranges have gotten pretty wide here. So we open up, right, we test, we find responsive buyers off of that test, which I would expect the first time in. The only issue with the 1808 is if we open up in this 1812, we're going to have a very small rotation in, and probably not big enough for me to take a trade off of Globex lows initially. Again, this depends on where we open. We may actually open, we're trading 1812, we may actually open at the Globex lows. So I won't take a trade there, but I will look for responsive buyers. If we can get responsive buyers, it'd be really nice if we could push up into the white zone. Now, there's only one issue with the white zone at this point, is if we break below and we test the Globex lows and then we close back in, I would still expect a rejection at the white zone. But if you're leaving trailers, right, at this point you would clearly have your 2 points. And for the majority of my coaching clients, guys, for the majority of y'all, you would be done already with your 2 points right here, right? However, you have to consider the trap trade. If we would capture yesterday's lows, right, that could again push us all the way back up into gap fill or higher. So again, something to consider, or something we had to watch for, is if we do break Thursday's lows, or we open below Thursday's lows, push down, and then recapture Thursday's lows, the trap trade would be in play. Again, I'm not trying to capture necessarily all these trades unless I fall into these trades like I did yesterday, where we had the zero tick and I was simply able to leave my trailer and trail it up just as I was able from Globex lows. Also, you got to consider the stretches, right? Anything beyond a 12-point stretch in either direction opens us up to snapping back, right? Now, in this case, right, we're opening down 11. So I wouldn't assume the stretch right out of the gate. I would assume another 10 to 15 points down, and I would start looking for a stretch. So these are my upsides. Those are my 2 upside scenarios. We're either going to open up and immediately drive, and in this case, we're opening below prior days. Excuse me just one second. Okay, we're still all good. We're opening, it looks like we're going to open below yesterday's lows, right? So the first key to the upside is going to be getting back above Thursday's low, and then above the white zone. And it's certainly possible this is going to be a tricky little area for trailers, right? So just manage them properly. Let's go through the downside scenario now. Okay, so we open below Thursday's low. We have 2 options from that point. We come up and we test Thursday's low and reject out. Again, in order for me to take a short at Thursday's low from where we're opening, I'm going to need a good stretch. And I will probably pass If we're opening at this 1811, 1812, I'll probably pass on this short the first time in. Again, because it's simply not enough of a rotation, and I don't want to get whacked with taking a small rotation and then it just having stretched 6 or 7 points up in the white zone. And instead of setting up a good trade for me here, I end up taking a stop, right? So continuing with that mode, we open up, we test Thursday's low, we come into Globex lows. I would imagine we're finding responsive buyers, right? And then this brings up a question mark. We either come back up and test Thursday's lows, or we get a small rotation, kind of stutter step, and push lower, right? Now, this 1804, 1806 has been on a lot of people's radar for quite a while, since the first time we pushed down to that 1810 level. I would look for, again, a response of buyers, assuming the proper stretch at this point, right, for a rotation back up and a backside test to Globex lows, or at least our 2-point rotation, right? Where I take this trade will depend on how we treat Globex lows. If we blow straight through Globex lows, right, from the open, again, I want a 6-point stretch, right? So if we blow straight through Globex lows into this zone, I'll look for responsive buyers. If we consolidate at Globex lows prior to this break, I'll be cautious here and instead come down to look to initial support. Almost any way that we get to this initial support area, I will take a trade to the long side somewhere in this zone. I'm willing to take the loss at initial support, right? And it's even possible that we push back to 1799, but the gap fill comes in at 1802, and I would assume we're going to get responsive buyers in here. You have to assume, because of the increased volatility, right, and the potential for increased fear, there's going to be a lot of people trapped all the way up to the highs, right, 1845. And we could really get a lot of fear surrounding this area. And what I'm really hoping for after this 2-point rotation is that we actually shake down below 1799 and we push down into the 1795. Right now, when we push down to 1795, again, I will take a trade from this level. What I'm really hoping for on my trailers here is that we can get back above initial support, right? And if we can eventually push above Globex lows, we have the potential to squeezing all the way back up to the white zone again, and even the potential for gap fill, right? So we saw yesterday afternoon, when the market gets really stretched and there's too many people pushing to the downside, those traders can get trapped and cause a really beautiful squeeze to the upside. So we also experienced at yesterday's low, we had tick divergence, right? We were stretched. I believe at that point we were down 20 points, if my memory serves, and it may not. Obviously, that'd be easy to check. Go back and take a look. All right. So these are things to keep in mind. Opening below Thursday's low may set in a pretty good bout of panic right out of the gate. Certainly breaking Globex lows will cause a good amount of fear. I know that we're down 12.5 points at this point, but the way that I'm looking at it is I'm actually going to consider the entire last area for frame of mind, right? I'm going to wipe out this last hour and consider really the gap from 1817, right? Which will really put me here at 1806 and 1802, 1800 as really nice trade locations, as opposed to measuring it from the actual gap fill. I don't have a basis for explaining why that is, other than to say that it was such a strong short squeeze right at the end of the day. And I think it was in anticipation of earnings coming out afterwards. But by the way the market traded overnight, really this range, this 1820 down to 1810, was the true afternoon range. And I would really think that we would hold this through the period of the day, through most of the day. If we get above 1820, right, that scenario changes. But right now, I'm going to assume the resistance in this area. So those are my downside scenarios. None of them are super easy in terms of, other than picking where, if I do get that 6-point rotation or more, right, I'll be looking to take trades from all of these areas. Looking below this area, by the way, if we get to some kind of real panic situation, we have these zones below, but really everything from below 1800, this goes back to the day when we had the Fed release where we had that huge up and down day, right? There's not a lot helping us. There's this whole area from 1800 all the way down to just under 1780 is really poorly auctioned. Okay, and so what that means is we could come in and fill all this, re-auction all of this area all the way down, right, and then find responsive buyers down here. It's hard for me to see us getting down to 1780 or really even 1790 today. That'd be a really, really huge stretch for us, right? So I really look at worst to this 1795, but of course we'll let the market dictate. And like I said, I'd really love to see a shake and bake down here and push us back up like that. But that's just more of a dream scenario than a likelihood. I did just want to point out that there are areas down here, and that all of this is once again, extremely poorly auctioned. And when you have a poorly auctioned area, you can simply come in and re-auction a portion of it. So we could get reversals from any of these points. And if we get down here, I will be buying with both fists. The exception of that comes with the last hour, right? If we're trading down here in the last hour, any low is possible, and it's pretty much hands off for me in terms of looking for a reversal. If it happens, it'll happen without me. Let's go to the NQ scenario quickly. And again, I'll be keying off of NQ. I think it's very important to note on NQ, we have not penetrated Thursday's lows. Thursday's low is 35.81 area and change. I don't have it exactly. I didn't write it down. I'm not going to bother to look for it right now. However, if we look at our Globex low, I believe, I want to verify that I got that right, is 35.8250 right here in this area. So one thing I will be watching for, we are trading below yesterday's low on ES. I'll be watching for a positive divergence on NQ, and I probably will be keying off of ES to look for longs in the NQ trade. Of particular interest to me will be that if we somehow push down to that 1800 and 1802 or the 1804, 1806 area, right, and we still have failed to break the lows on NQ, I would look for a strong responsive buy reaction in NQ that could potentially, right, push us all the way back up to Thursday's high. Yesterday, I pointed out that a couple of days ago, we had exactly this type of response. And again, I think most of the momentum stocks still have momentum. And I'm not exactly sure what's changed other than this is a normal response. This is a normal breakout and retest. And that's all we're doing so far is retesting or hopefully coming back for a test of the former balance area. And what I will show you here is if we pull this in really quickly. I highlighted this yesterday. I'll highlight it again today, right? This is what I was talking about yesterday that I was looking for. Again, note the time of day that the reversal came from was that 10 to 10:30 spot. I'll be looking at this area all the way into lunch, right, for potential reversal area. But I'm not going to try and really stick a trade prior to 9:30. It can happen. Obviously, there's no rule about 9:30 to 10:30 having a reversal. It's just a repeated day in, day out point of reversal, both or at least pause on both trend days up and trend days down as regular, just simply regular balance days. Also keeping in mind with this pattern, right, it is very normal to get a push up in the morning. This is on down days, right? Get seller's response and then come back up in the afternoon. Usually it's either to halfway back up or a third of the way back up for the close. It is rare to get a close on the absolute lows of the day. So keep that in mind. And also, even when we do have these down days, it is pretty normal by midday to get some kind of push up and then kind of have one of these three options open up to the market, right? And obviously, I'm not predicting which one of these we'll get, but that's usually the pattern. If we don't follow this pattern, you know something's different, and then you need to kind of pivot on your game plan and make a choice B. So that's my downside scenario. Excuse me. Let me go through the scenarios real quick. So the scenario would be we're opening 35.95, which actually puts us right in the white zone, which means I don't have jack in the white zone to open up with, right? The reason why there's no zone here is this was all poorly auctioned, and I'm not going to try and guess where we reverse. My hope is we could push up to gap fill, right? If NQ leads us out of the gate to the upside, right, we're going to have to see if ES is getting weight sell pressure on the downside. It already looks like we have a tug of war going on between the two of them, right? I'll look to NQ to lead up, and then I want to see ES follow, right? And the first test of that will be ES getting up above yesterday's lows. I would expect on a good stretch here, right, that we have responsive buyers up here. I would prefer, due to the volatility, right, if you look at this stretch here, this is basically 35.80, right, all the way up to 36.13, a 30-point stretch. In terms of where I'm looking to really stick a trade in NQ today, because of the volatility, I'm looking for 20 to 30-point stretches before I take a counter trade. That doesn't cover my scalps, but we're not discussing that here with regards to the zones. 20 to 30 points, and I would rather have ES in a support or resistance zone, both for longs or shorts, in terms of keying off of NQ. And when we do get a reversal back up, I would expect NQ to have much stronger buyers than ES, and that it would actually accelerate to the upside faster. Okay, now to my coaching clients, that does not mean switch off of ES and go to NQ, right? Use that as a learning opportunity. Stick to your trade plan. Very, very important. So before I switch over, it's 8:21. I want to go over the last couple of important items, particularly for my coaching clients. Number one, 2 stops back to back. Stop trading. There's no need to dig a hole on a day like today. We're going to get plenty of opportunities this year, right? No one day matters. No one trade matters. Know before you enter the trade, right? Pick your spots and know what you're going to be looking for exactly to take the trade. If it doesn't line up with your parameters, don't take the trade, right? If it's not the right size rotation for you, if you're simply uncomfortable and you can't identify, right? We're just in a learning mode every day that we happen to be making money from, right? So if you can't see the opportunity, or you don't understand what's going on, or the market's simply moving too fast for you, just switch to, hey, I'm taking notes. I'm going to learn from this. The market's not always quite this volatile, and I can use this as a learning experience, right? And then move forward. But there's no point in taking a learning experience where you're going to lose money. Number two, on your stops. I had a tremendous number of clients move their stops yesterday. That is a fear response to the volatility, right? Don't do it. If you're going to take the trade, be committed to the stop, be committed to the target point, and then don't flip around, right? Yesterday afternoon when we had this big run up, I heard from multiple clients that is like, well, I should have held. I should have done this. I should have done that. The whole point of having structure, meaning structure in and structure out of the trade, in terms of stops and exits, is to eliminate the thinking that leads to fear, right? We have no idea how far it's going to push. As your account grows, we have a plan for increasing trade size. And as you increase trade size, you can leave trailers. But stick to what your trade plan is. Don't get greedy and try to capture a larger move, right? Because by the same token, there was plenty of chances yesterday, particularly this 1821. I want to go back to this area really quickly. This 1821, 1822 area, there was a support yesterday, right? If you had said the exact same thing for those clients that got that trade, if you didn't take your 2 points, you ended up with a loss, right, or a break-even trade. So don't keep flipping the scenario on yourself and trying to figure out, well, what comes next, right? Stick to your trade plan. We don't have to figure out what comes next. We already have the trade plan prior to the open. Okay, I think I've pounded that quite enough at this point. I'm done with my upside scenario. Let me go. I did go through that. If we open up, obviously key to this on NQ, holding above Globex lows, right? Again, looking for an open drive higher here. On the downside, right? If we get below Globex lows, that'll be a heads up that sellers are starting to win the day, right? I would look for, if I want a 30-point stretch from the open, right? 20 to 30 points, we're opening at 35.92 area. That means, let's see, I'm opening the white zone. That means I am looking at either this 35.72 area, which is a smaller area. I will take a responsive trade out of this 35.60, 35.64 if we stretch down here, right? And I would look for a responsive push back up into Globex lows. This Globex lows then will kind of determine our day for us, right? To the downside, if we can get back above, we'll have plenty of trap traders down here, and we could easily push back up into the white zone, and above the white zone, we can come back up and close that gap again. We're in a volatile environment based on yesterday, and this is certainly a possible scenario. By the way, the one scenario I haven't covered is that we simply go into balance, right? And that scenario would have us trading on NQ from this 35.92, right? And we could either come from here and do one of these jobs, or we come in and we break Globex lows either here or here, and then we push back and balance the rest of the day, okay? And this same type of formation is possible on the ES side. I didn't cover it, but it's a possibility. So how would I know that we're pushing closer to a balanced scenario, particularly at the first hour? Would be that the tick will predominantly stay between positive 500 and negative 500. Not all positive and not all negative. It'll balance easily between the two. That lets you know that these stretches will be met with responsive buyers, and we will constantly push back towards the middle for the balance of the day. And that means, particularly at the first hour, that the best places to take trades will be from the edges. If I see this scenario developing, I will call it out. It is not unusual to go into balance after a big day. So it's 8:27. Let me see if in 3 minutes I can cover the last scenario, go over the volume profiles here real quick. Okay, in ES, I want to stress this here. All right, let's pull this in. Okay, this is the top of the prior balance area right here, right? We closed here, we broke out here. It would make perfect sense, right? Breakout, almost retest, punch a little bit lower, find responsive buyers, and push back up and break out. This is a possible bigger picture scenario, right? No damage has occurred, right, on this chart yet. Now, if we get below and hold below 1800, all of this, starting here, all the way down to this area right here, which is really just below 1880, this is poorly auctioned, and I would expect us to come back in and re-auction this area. And it's actually possible if we get below to come all the way down. I don't expect that today. Obviously, that would be a huge move. I would expect if we're going to come all the way back down to here, is what's going to happen is we're going to close below this level, and then we'll start working through this balance area again. But I don't see why we're going to do that, other than unless the market's correcting. And I don't have enough knowledge or experience in 20 years to ever predict this stuff accurately. So again, I just look for scenarios. Over on NQ, let's look at this really quickly. NQ daily. Okay, again, this was the top of the balance area, right? We tried to break out above a few times, failed back in, right? Makes total and perfect sense to come back in and right? Breakout, retest, right? All we need, we've already closed this gap here, so that doesn't exist, right? Retest, push in. We have a little poorly auctioned area right in here. Push down into this area, then push back above, trap people lower, and push higher. What would change this scenario for pushing higher is if we actually um, come in and close back below and are unable to push back up, right? Then we open up ourselves to the prior trading range all through here, right? But I don't see an Armageddon scenario. Don't get overly bearish at the lows. Don't chase the lows. I'm trying to see if I have any other scenarios that might that I haven't covered here. I do want to go through the tick charts right before the open. I can afford to miss the open. I don't really want to get involved in the first 5 minutes anyways. So let me bring these over really quickly. Okay, first thing I would suggest someone have on their chart to help you out with just keeping your place on where we are in a larger picture, right? I keep a 5,000 tick chart up on my desktop, right? We've obviously, and I keep it crunched up like this for purpose, right? We're obviously right down here at where we had responsive buyers last time, right? And if I look for my next market structure where it's sitting right in this area right here, right? Which takes us from really 1805 right down to that 1795 area, right? All of this, excuse me, all of this, I would expect to find responsive buyers and our day's low somewhere in this area. If we break here, right, there's not a lot. All of this was poorly structured. Looking behind it, because it is poorly structured, we have a level here that's roughly 1788, and we have a level here, which is that 1780, 1782 area right in here. And then if it really were to get super ugly, this is the bottom of that breakdown retest area. Again, we have to go off of that because it's so poorly auctioned. And then this is the bottom of that Fed day and the very bottom of that range. Once again, I'm not looking to get anywhere near down here at all today, at least, right? And on the upside scenario, right, where's the first place where we have structure that could get retested? All the way back up here at 1840, and it's totally conceivable to me, right, that we could come up, test the bottom of this structure or the top of this structure, and then come back down, right? It doesn't have to happen. It's just an area that I'm looking at, and it's another way of looking at the market. Clearly, the larger balance area is right here, right at the bottom to right up here, right? That's our larger balance area. And this has kind of been this area here from 1818 down all the way down to 1802-ish, 1804-ish, right? This has all been in no man's land and very difficult to really see anything to help us out there in terms of bigger picture. So we could easily slip through there and come down and test this area. That's what I got for today, guys. Oh, wait, one more thing I want to go over, as long as we're in the first couple of minutes, is the 800 tick overnight on the 24-hour, right? You can see that we have a pronounced downtrend that was something like this yesterday afternoon, right? Down here, if we take this to a logical point for a backside test, that would put us right at this 1800 level, right? And what I'm talking about from a visual is this right here. Now, this is a 24-hour chart, right? If we get a, excuse me, it's not what I wanted. So if we get an AB equals CD, right? Again, that puts us, if we get a true equal length move, right? AB equals CD, that actually puts us right down here into that 1795 area. Not saying we'll get there, right? But boy, it'd be nice to have a shake and bake, panic out everyone below, maybe even push right down to 1795, right? And would provide us with a just kick-ass trade location. Would love to get this. If we see it today, hopefully prior to the last hour of the day, and then, right, we could easily see this would end up being our bottom of our structure right here, right? So then we could easily see, right, responsive buyers push us potentially all the way back up into here. You have to keep these larger potential ranges in mind, right? On looking at that same layout on on the daily chart. Let's see, here we go. These are 1450 for the regular trading hours, right? So there's two ways to look at the move from this perspective, but if we just look from a day time frame, right, we have roughly AB, and then we'll, it's nice and fat so everyone can see it. Okay, and that would give us, well, let's extend this out and see if that helps us a little bit. See if that'll do the trick. That is not what I was. Well, it would give us 1810 actually, and that's right where we're sitting there. So, to perspective, day time frame, right? That would give us 1810. So, the other way to measure that is to look at it from this perspective, right? A larger AB equals CD would give us again, and we're pushing into those right now. We're pushing into overnight lows. We simply haven't had enough of a rotation in there for me to take it, and I don't feel like being aggressive this morning. So I come in with that same scenario. That puts me again, even on the day time frame, down at 1795. So we have two ways of looking, right? In today's scenario, 1810, 1808 is one ABCD, right? And then on larger picture, right, we have a larger ABCD that pushes us again to this 1795, 1797 area, just below 1800. And man, I would really, again, like to be able to get in here, right, and for a pushback up either to 1805, 1806, or back into this 1810 area, or if, hell, we get really crazy, 1820. But just step by step. And so let me go over here and look really fast. Someone asked a pretty valid question here, so don't mind looking. And let me get to my 1 minute chart. By the way, we got that huge negative tick, right? And that quite often, that negative 1,000. And so I'm not looking to be overly bearish, or certainly not until we at least get a zero tick. And even at zero tick, the risk we run here is once we get up to zero tick, is that we actually reverse and keep pushing straight through. I'm cautious on this scenario. When I get these scenarios, I'm cautious on the downside, particularly on NQ. NQ is still, I believe, failed. And let me bring these in real quick. NQ's testing its Globex lows, but still failed to break below, right? And if we do not break below, or we break, right below and recapture, it's certainly possible to push back up. So again, we really haven't, nothing terrible's happened, and we're pretty stretched. We're down 15 from the close, right? And really, I'm considering that 1820 the top of the range yesterday, erasing this last hour's move, right? So if that's the case, we're still down about 10 and have room to stretch down to that 1806 and 1802 area, where under most circumstances I would expect responsive buyers. If we get a shake and bake below there, I will try to stick my trade from 1795 area. So I think I covered everything there is to cover, guys, and I hope everyone has a great day. I hope this was helpful. Remember, no one trade matters. Let the market stretch out, right? If you miss a trade, we're not. The reason traders stay inconsistent is because they're constantly trying to get a read on what's going to come next. They click in and out, and they drive up a ton of commissions, and they never get that consistency. One day they nail it, the next day they rack up a bunch of losses. Don't let that be you. Pick your spot, let the market stretch, let it come to you, right? All you need is 1 or 2 trades a day. Let someone else be the super duper trader. You just stay consistent and make a lot of money. Sounds like a really smart plan to me. So anyways, have a great day, guys. I'm done. Oh, wait, someone else says, why cash today versus taking the trade yesterday's and tick? Because, Brian, we opened up so far negative on the initial tick reading here on ES. This is my 1 minute chart, right? We opened so far negative on this thing that it's highly possible that we got all the panic out of the gate. And even though we're pushing lower on a lower tick reading, I might consider taking a shot at 0. But if you look at yesterday's tick open, we can look at a 5 minute. First of all, we had this huge open drive lower. Excuse me. While I was on NQ, let me find my ES chart here real fast. Look at the open yesterday. It was just above 800. It was 700. It was negative, but it wasn't like, oh my God, negative. And we drove higher for a 0 tick entry, right? And it provided us with a beautiful short entry. And if you look at the open drive, let me change this to candlestick. Spread this out. Right. If you look at this open drive, we essentially had an open drive lower. We drove lower as the tick came up, right? So when we got to 0 tick, it gave us a beautiful trade location. That's the difference. So anyways, guys, you bet. Let me see if there's anything else. Yeah, Chad, it's very early to have positive tick divergence at this point. Really, I don't trust it in the first 10 minutes, even in the first half hour. And there we go. Broke the lows on NQ and on ES. 1806, 1804. And let me see where we're at on the ES. H14.D. So 1812, 1806 gives us a 6-point range. Consider the volatility and whether you really want a 6 or you want to push that 7 or 8. Stick to your trade plan and don't be shocked if you get smacked I may hang out here. We're still in the first 15 minutes, and I didn't bother checking if we have econ. Let me see that really quick. We have econ Friday. I show no econ after this, so we could get this pushed down here and then get responsive buyers. Anyway, I want to go and focus on this. Guys, have a great day. And again, stay focused. I'll call them as I see them.